Welcome back to Sloth Father Trading, everybody. Appreciate you stopping by. Got a good one for you on this one. The last video, it's tagged up here somewhere. You can click on it. It's pretty important to watch, as this is a series on how to build a profitable trading plan. Today we're going to get into a little bit more detail. The previous video, part one, was basically how I find a particular edge in the market and what setup I should be trading. Very specific way to find that, and very quick and easy to do so. So go check out that first video. Today we're going to get into a little bit more detail, and that is going into some sub-reports on the main report we used to find the setup we want to build a plan around. Okay, so let's just go ahead and jump into it. We saw that we wanted to trade gold, and we saw that based on the standard report over the last 1 month of data. Okay, which over the last month has been extremely high. Now that may be a short-term trend, but when we see these kinds of numbers, we want to give it a shot and see if we can catch that trend continuing a little bit. So we want to trade the initial balance breakout on gold. So where do we go from here? We know what we want to trade. We know what setup we want to take, but we need to kind of figure out what our plan's going to be. So I have my little notebook here to take some notes on these sub-reports, and we'll just go from there, right? So let's start out, and we'll just break it down by weekday, okay? Friday, we'll just start on Monday. Monday is an extremely good day to trade. It only breaks out to one side. It does not come back and break the other side, and it has always broken out over the last month, okay? So that I really like. I'm going to go ahead, since that's 100%, I want to see if that drops a little. Okay, so 92% of the time, with only almost 8% not breaking the initial balance range over a 3-month period. And we'll just take a look at that over 6 months. Okay, that is still a really good number. That didn't change a whole lot. We still had 0 double breaks on Monday for the last 6 months. So Monday is a very good day to trade this setup. Okay, so we'll go back to the 1 month report, and I want to break. Well, let's just take a look at the other days real quick. 75, 100, 100, and 80. Now these 100 days, I want to see if it's acted the same over the last time period. Yes, pretty much. The no break days are a little bit higher over the last 3 months, but that's to be expected. But the double break days have not changed very much, which is telling me that over the last 6 months, we're only going to break one side of the initial balance. We are not going to be going, very rarely are we ever going to reverse after breaking, say, the high and go down and break the low, vice versa. If we break the low first, we don't expect this to go back and break the high. Okay, so that's a very important deal, and that's pretty much any day of the week, right? Fridays, I think we said were pretty much the worst probability day, and that's still 74%. So that's well above my 65% threshold of something that I want to try to look at to trade. So the numbers are really, really good by weekday. So let's go by size. How big of an initial balance are we going to be looking at here to get the same type of data? Well, a small initial balance will actually have almost a 19% chance of a double break. If we go up in size, wow, 0.4 to 0.59, yeah, 0.59%. Our numbers go way down for double break days. Okay. A 0.5 to 0.89. Okay. Now our probability of not breaking the initial balance has gone up to almost 25%. Okay. And that's a little larger size. Anything greater than 0.9%, we still have very low double break days, and our no break days are still around, that 11 to 15%. Well, 24 was our largest. Okay. But our double break days on any size of initial balance is very low until we get to the smallest size of an initial balance, which tends to prove out across most assets. Very small initial balances tend to get broken on both sides of the balance. Okay. But even then, we're still below 20%. Okay. So when you're looking at a probability status of trading this size, still only 2 out of every 10 trades would you expect to take a loss if you did not expect it to break both sides. Okay. So still very, very good. I do want to see what is the largest number, 0.4 to 0.5. Okay, so 0.4 to 0.6, 0.4 to 0.6, and anything over 0.9, our single break days are the highest. Okay, so I want to keep that in mind for some other reports that we're going to run, right? So that's our by size report. We're going to go down to by performance. Okay. And now this is going to tell us the maximum extension on, okay, first thing I need to do is go down to customize and work on a buy close percentage. Okay. So I'm always looking for the candle to close outside the initial balance before entering a trade. And these are the numbers I want to see specifically by close. Okay. So by close, when we get a break above the range, the maximum it has gone over the last 6 months is 1%. Okay. I want to pull this down to the 1 month and see what we've been doing over the last month. And it's about the same. Okay. So it hasn't changed much on the maximum extension over time. Okay, well, let's leave that on 1 month for now. A maximum to the downside is 1.14. So this is going to help me find my target levels, okay, for take profits. All right. So what I want to look at here is take profits, max 1%, okay, on both sides. All right. Now the average here is going to be a little bit different. It's going to be 0.3 and 0.45. Okay. So I'm going to make a little side note there. On the average, I'm looking at 0.3 up and 0.45 down. Okay, that's the average. Okay. We never really want to be reaching for the maximum because that's the maximum it's always gone. It's not always going to go there, right? We're going to have an average. Okay, so you're going to make notes on that. All right. Buy close. Okay, so this is going to tell us a little bit more where price closed at the end of the day in relation to the initial balance, right? Close of day. All right. this closed above all days. I want to look at breakout days. Okay, so if we break out to the upside, 62% of the time the day has closed above the initial balance. Okay. Up 62%. Okay. And 37% of the time, so 3 out of 10, we've actually closed between the IB high and low. Okay. So 3 out of 8 days over the last month. Okay. We've closed below when we have a breakout to the upside, not below, but in between the IB high and low when we've had a breakout to the upside. Okay. Now let's go ahead and look at breakdown days. And 60% of the time we have closed below the IB low on breakdown days, and pretty much the same. About 40% of the time we've closed between the high and low. We have not closed back above at all. Okay, so we're looking at about 60% up and down breakouts by the end of day. Okay, let's go to by time. Okay, so this is going to be, let's see, size breakout time 11:30. So initial balance is set at 10:30. We want to customize this a little bit, simply because I want to see if we break out within a half hour. Okay, so that would be 1.5 hours because the initial balance sets at 1 hour, and we want to see by 1.5 hours, by 11 o'clock. How often do we break out by 11 o'clock to one side or the other? That's about 50-50. So let's push that out to 2 hours and say by 11:30. How often have we broken out? Okay, now we're at that 65%. Okay, so we're going to be looking for a break of initial balance by 11:30. Okay, which is good because we don't like to trade into the lunch hour unless we're already in a trade. Then we'll let it run. So by 11:30, we expect to have our breakouts 66% of the time. Okay. Oh, buy close. And that is a single break day. Okay. So by wick or by close, let's see. It does drop our expectations by 11:30 just a little bit there. But 6 out of 10 trades are going to work out in our favor of breaking out before 11:30. So that fits within my time frame of trading, right? So that's good. All right. So let's go by retracement. Here's an important one. Okay. So when we break out to the upside, 66% of the time, we are going to retrace back into initial balance to the 25% level. So that is a pretty, is it? Yeah, 66. I got a little reflection on my screen there. So 66% of the time, retrace to the 25%, we have to expect 66% of the time. Okay, and you'll see later on how that works together. Now you may have to go back and watch some of these videos a couple of times each, to get the full plan together, right? Because I'm going to break this down into small pieces. I don't want to keep everyone here too long, and we're already at 15 minutes. So the sub reports is all I'm going to go through, and the next video I'll show you how to use those sub reports to build a plan, right? All right. So, and if we break down, 70% of the time we're looking to go to the 25% level. So either way we break, we should expect a retracement back into the IB by these amounts, because that's pretty high probabilities. Once you get to the 50% range, when it does come back in and it goes to the 25, 70% of the time, will it exceed the 25 and go to the 50% level of the IB? Well, only 40%, so 4 out of 10, okay? So that's going to be, this is where I'm looking at stop losses, or even a second entry if the first one fails, okay? So my second entry really needs to be around the 25%. So let's just say price breaks out, I take the trade, it stops me out because it comes back inside the initial balance, right? Now I'm looking for my second entry on this, and I know I need to let price at least get to the 25% because it happens the majority of the time. And I need my stop loss to cover at least 50%, okay? Because it does happen a bit, but it doesn't happen that often, to then go back and break back down below. Because remember, our single break days are huge. We very rarely ever go back, and sometimes it's a 0% chance over the last 6 months that we go back and break the other side of the initial balance. So this would be my second entry criteria here. All right, let's move along because we're getting a little long in the video. We want to look, so if we know the retracement, let's go by rejection, okay? So when the IB high is formed first on gold, so price pushes up and then comes down to create the initial balance, the first break is to the low side, okay? 77% of the time, all right? Rejection. Okay, so when an IB high is formed first, I can expect a very high probability that the initial balance is going to break to the downside. Okay, off high to low, 77% of the time. Okay. Conversely, if the IB low is formed first, only 53% of the time do we break to the upside, okay? And 48% of the time we break to the low side, okay? So from low to high, I need more confluence. Okay. All right. Next sub-report we're going to do is by levels. And this is also going to help me look at targets. So we want to break out by candle close. We want to look for breakout days, okay, because we're looking for single break days, not double break days, right? And we're going to save that. All right, so on breakout days, what are the levels we can expect to get to? Well, 55% of the time, price will get to the 0.5 levels, and I'll show you how to use those. Levels is 0.5, and then only 22% of the time will we get to a 1.0 deviation on price, okay? So 0.5 is really where we're looking to take the majority of our size off on the trade for profit. We can leave a runner to see if we go higher than that, but we shouldn't expect too much more than that, okay? And let's go to breakdown days. Okay, and this is to the upside. All right. So 63% of the time we'll get to the negative 0.5. Okay. 0.5. And that's where we want to take the majority of our profit off of. Now, we do have a better chance of our runners continuing further to the downside over the last 1 month than we did to the upside, right? So 45% of the time, we will get to the 50% level and expect our runners to make more money. Okay. All right. I think we're pretty much done here. Breakout. Okay. Let's just take a quick look at buy breakout. And all this is doing is breaking down the standard report. So the standard report said we had a 90% chance of us only doing a single-sided break. Well, which side has been breaking more? And you can pretty much know the answer to that question if you follow gold. I do look at gold. I just don't trade it. We've been in a downtrend on gold since reaching the all-time highs, right? So 45% of the time, we are breaking the initial balance to the downside, and our stats are better for trading to the downside as well. Okay. Not to say you can't take a trade to the upside, not to say I won't take a trade to the upside. I'm just not going to expect as much out of upside initial balance breakouts than I would a downside initial balance breakout, okay? Until the numbers on this start to change a little bit over a 1 month time frame, okay? Well, that is also by Wick. I'm sorry. I've got to come in here and have it by candle close, and that gives us an even better chance of breaking out to the upside, 50% to 40%, and our double break and our no breaks are only about 10% of the time, okay? So great numbers to the downside, not bad to the upside, but just don't expect as big of a move. Size down a little bit, take your profits a little sooner is basically what my thoughts would be on that. Okay, so that is the sub reports, and we're at 22 minutes. So I'm going to close this video out here. This is how I pull all my information from the sub reports, take a look at it, and start creating some biases on what my where my stop losses should be, where my take profits should be, all of that. Okay. The next video, we're going to actually get on the charts, and we're going to put this information to use, and I will show you how that's done in the next one. That'll be part 3. Thanks again for tuning in for part 2. If you wouldn't mind, do me a favor, like the video, subscribe to the channel, and leave a comment. Let me know if you think this is a really good way to build a trading strategy, a profitable trading plan, and do you use Edgeful now? If not, are you starting to think maybe it might be a good idea? Well, if you want to check out Edgeful, I'm going to leave a link in the description below to Edgeful, so you can go check them out, and I would appreciate it. I am affiliated, so if you end up deciding to purchase a subscription, then I will get a commission off that. So I would appreciate it. It certainly helps me and the channel out. So until the next video, everybody, I will see you in part 3, and stay blessed.